Hey everybody, welcome back. Well, not much to say here about the index in and of itself, is there? You have a little flag, you're breaking out. We take a look at the NASDAQ in and of itself, and we can see how that is breaking out as well. There's not really much to add at this particular spot for this. What I think is most important for us to spend time on is not just this, but why is this not 1999? Why is it not even close to 1999? There's some concept here, but that does not mean that we could just go straight up. So without really spending a lot of time on the indexes itself and what's going on, I just want to jump into 3 simple concepts that you can utilize for tomorrow so you can understand exactly what is going on. I also want to walk through a couple trade ideas that I have for tomorrow and one trade that I got asked repeatedly how I handled over and over again. So let's just jump right into it. Now we're going to have a couple different concepts this evening, but this one we really need to go over so people get this. So I do think that we are seeing signs that we're overbought. That does not mean that we're just going to fall apart. And what you're looking at is a piece of research from one of the larger investment houses out there. I just want to show you what it is. This is taking the US stock market from the .com time, and this was too important for me to wait for a Saturday, in my opinion. So I'm going to do some of this tonight. And stocks with an enterprise sales value or enterprise value divided by sales ratio greater than 10. All right. So enterprise value divided by sales, that ratio greater than 10. That's a pretty excessive ratio. All right. And what we're going to see over here on the percentage side, 35% during .com at that peak. All right. So shares of US equity market cap, shares of company. So what are you seeing here? Shares of US equity market cap, shares of company. Look at where you are, okay, versus where you are now. And I think this is a really important distinction. Let's just change the color of this so you can see the difference between these two very clearly, right? And then you can see the difference here, okay? So to say that we're in some type of situation that is even remotely close to this is just not realistic. It's one of the things why I even pointed out the other day, and I did do this on Saturday, and just say, it doesn't mean that we're going to go up, but to say that this is like .com, it's just not realistic. It's just, no one's seen this before, so they're not used to it, right? But this is actually how a market behaves. You have some winners, you have some losers. And yes, it is getting ahead of itself a little bit, but there's reasons for that. We're going to show you some of those reasons and why this can continue for some time. Not straight up. Please get that, because you're going to see other things here tonight that you're going to say, but you just said, and the goal is to understand where you are in the pecking order and then figure out how you're going to benefit from it. It's not to come out and concrete. There's nothing concrete about doing or trading the market, like literally zero, nothing, right? Everything is shades of gray, to say the least. So median company PE multiple. Okay, well, the median company PE multiple for the S&P, excluding stocks in the top 10. So excluding the top 10 stocks, you were at a 19. So we said that was a 19. Okay, well, now we're at an 18. Okay, well, let's just say that this went to 19 today for whatever reason. And let's just take this and just go straight across and keep this the same level. Is that a reason at all that we should be somewhat concerned that the entire PE is here? Not really, no. I mean, we were here before. We were here for years. We've been here for years before. It's not something that we should be looking at and feeling some type of way. And the other thing is the time that you were in. So let's just take from the .com over, right? And we'll take from when the great financial crisis from here, and then we'll just come straight across and we'll say to about 18, 19. Well, we can really just go right to about 19 because you'll get this concept in a moment. And all in here, you had 0 interest rates. So if you had 0 interest rates, you're not going to have PE expansion because you don't need it, because your risk-free rate is significantly lower. So you're not going to have to really worry about that, right? Because if you have no money being made if you own a treasury bond, literally 0. So what I was getting at on Saturday's video, and the point that I'm getting at is this. The point that I was getting at is that if we took Cisco and you looked at where Cisco is, and then you said, and Cisco is actually 80 times, and you look at where we are now on the top 10 companies, and you realize that you're here, and you're basically looking at a double. So picture earnings staying stagnant, not growing, okay? Earnings staying stagnant, which is basically let's just play devil's advocate because it'll make the math simple. And then picture earnings stay stagnant and then all top 10 stocks double. Earnings stay stagnant and all 10 stocks double. Top 10 stocks double. That would be .com. All right, just to put it in perspective. Now, that has nothing to do with earnings growth. Now, do we think that there's going to be some earnings growth? I personally think that. I want to show you something. Now, the internet certainly increased productivity. So did the fax machine. So did several other devices. So did buggy whips. There's so many things that we can go through, right? Through time, okay, local carriers, oil. You have all these different things that you could look at, the internet, all of it, web pages, et cetera, et cetera. What we're seeing are signs, and this is from an investment bank, and their piece on this was, how is AI actually affecting the world as of now? And this is just of now. And so this is obviously from AI that came out, and the comment was ripped out, but DELL Piper, global law firm, pioneering technology innovation. The legal sector worked with 3C AI to create its first kind generative AI application to streamline the analysis of complex legal agreements. In just 3 months, DELL Piper applied generative AI to reduce attorney time to create over 200 due diligence analysis of limited partners agreement, reduce the effort by 80%. The United States Air Force has stood up and said they're getting a 25% increase in aircraft availability, an increase in aircraft availability from predictive maintenance applications that is deployed as a standard in the Air Force. Okay, that's pretty impressive. So are we seeing benefits to this? Schneider Electric has a 15% increase in case efficiencies across 3,000 support agencies. Zoom, every month we saved 400,000 agent hours, and more than 90% of inquiries can be done by our virtual agent driven by the AI technology. Okay, anything that's going to increase productivity and drive up the bottom line, they're going to do, period. DUOL. The places we are using AI, let's get rid of that line. The places we are using AI is one just in our content creation. And we are just not only, we are reducing costs, but probably even more importantly, we are able to do things a lot faster. And what's good about that is it also allows us to experiment faster, okay? I wanted to just cut some of them out. I don't want to give all of them, but these are just some of the ways that this is affecting the world and affecting companies. Druckenmiller talked about this last May or August in his speech with Bloomberg, and he was talking about how we're seeing people actually be able to do their job, specifically coders, 7 to 8 times faster. And now you're seeing it in various industries, and this is going to continue. As long as this continues and companies can benefit from this, it's not going to go away. That does not mean that you're going to go straight up. It does not mean that you're just going to fall out of bed because you don't like where the prices are either. But there are some things here that we should talk about. Now, for time's sake, we're going to jump right into it because I do like to try to keep these shorter on the weekdays. But one of the things that we're seeing right here is MicroStrategies. And we're seeing this absolute rip where we're up pretty substantial. And then the question becomes, how long can this last? Well, the biggest test for me, what I tend to see is not are we going to roll, but when do we start slowing down? So one of the core tests for me is I use Bollinger Bands. You can use Bollinger Bands or not use Bollinger Bands. That's up to you. I'm just saying that if I want to see, are things getting goofy? That does not mean that they're going to fall down, but are we going to have to play catch up? So the way that Bollinger Bands work is they're based upon standard deviations. And I'm just going to show you a couple. So this is just a very simple line. It's not too crazy. You're just going off of 20. Okay, that's what they use. That's what everybody uses. That's what I use as well. So you just use the 20. I'm not going to play with Bollinger's stats or the way that he does this. It's actually pretty effective. And what you're looking at from this line is that there is a 67% chance that you're going to stay in the first standard deviation. All right, so the first chance that you're going to stay is that you're going to stay in this, right? So let's just walk through this so that you get it. So right here, you're saying, yes, I'm going to stay here to here, and there's a 67% chance of staying there. All right, then you get to the second standard deviation, which is here and here. And you have a 95% chance of staying in there. Now, when you get to the third, you have a 99.7% chance of staying in there. This works inversely. So if you pop out of here, right, you're looking at a 30+% chance of popping out. When you are over the second, you're talking about a 5% chance of popping out. When you're up to the third, you're talking about a 0.3% chance of popping out. Now, that does not mean that it cannot pop out. But what you will tend to see are things like this when you get to a second or third standard deviation, specifically a third standard deviation. When you start getting near them, it doesn't mean that you're not going to follow the pattern, but the progress is going to slow down, and these might widen so that this makes sense. Now, tonight, in regards to this particular name, they came out and said they're doing a secondary. I'm not surprised by that, and it'll slow down for a couple of days. These will catch up, and maybe it drops underneath and then goes and lifts. I have no idea what really happens here, right? None of us really do. You know, we're going to talk about the halvening for a second here, but we do have to look at this, and we do have to pay attention to what's actually happening, right? And this is what's happening. So now we're near a third standard deviation there. If we go and take a look at the SOXX, and we just say the same exact thing, okay? Third standard deviation is sitting right here. You know, before, right into this, usually I want some kind of down bar, but before, we had a great trade on the SOXX back here, and we took some money off here when it got to a third standard deviation, and everyone's like, but it's doing so well. It's not a question if it's going to do well, if it's going to go higher. The question is, does it make sense, right? When you start pushing these boundaries, there is very slim chance of staying in this range on a percentage basis. So when I start getting to those levels on my names, I start paying attention to them. And people can say, well, news could drive that, news can change that. It can, but it's no coincidence that you stop dead there today. There's zero coincidence of that. We actually shorted this today at the end of the day and did quite well with the short. It was really right at the end of the day. But once we got to there, that's when you know. People were asking me in the room, like, how did you know to start looking for that? And the reason for that is because I'm not the only one that's doing this, right? The market is controlled by a lot of computers. We know that they're controlled by a lot of computers nowadays. We know that there's a lot of people out there controlling these kinds of things, right? So what are they looking for? They're looking for algorithms, high-frequency traders. They're writing code. You start getting up here. They're fully aware of this, just like I am. And so they start building models around it. Now, if I go here, and I very simply, let's just drop to this, and I'll show you exactly what I saw when I put this on, and I'll show you it so that you can see it. But I really want to go through another trade here and show it to you. But let's go through this, and we'll make this bear. And let's get rid of the pre and the post for a second, and we'll just leave both those watermarks on for now as I clear this off. All we were looking for here was, are you going to hold this level? That's all I was looking for. There were some other indicators up here that told me ahead of time that it wasn't. We can get into it if you really want to. I think I might do some lives, like Q&As live in the evening, maybe Friday. Comment on that. I thought about doing it on Instagram, but I don't know. People said do them here, which I think might make sense. But anyway, you see how this is breaking down right here. Once you start to see this, you have a doji. Dojis are what? Signs of uncertainty. Once we started to see this, and you start to see this roll, we actually got ahead of it here on this break. And then we saw the doji, and then when you broke the doji, we knew we were okay. But this was something that we did a trade on and we did fairly well with. So I just want to show this because I'm talking about it. There it is, 343. By the time I typed it out there, you're right in this area. And the issue for me was once we started to break, that was pretty much it. And then we're just scaling out of it as it's dropping down, whether they want to hold overnight or don't hold overnight. Obviously, it's everyone's decision. But all I'm doing was wanting to see how they acted at 350. And then we just did at the money's puts. Nobody wanted to buy puts today, and the stock just flew down. I mean, it was a pretty easy trade. Very, very easy trade. But the point that I'm getting at here is, yeah, this could still be a huge market, and this could still continue to run over time, not just SMCI, but the SOXX, the NASDAQ, all of it. But there are some things here that you just have to kind of look at and go, okay, well, like for example here, watch this. So if you draw this over here and you start realizing, let me get rid of this for a second. You start realizing you're at the top end of this. I mean, there are some things here that are a problem. And some of these movements that we're seeing, they don't make a lot of sense. For example, if you start really understanding, and I could talk about this more if you want, and you just comment below, but these are probably the easiest shorts in the world. People are buying these miners, and I don't think they really understand that the halving actually costs them. These companies they're going to make half of what they were just making, according to this. So I keep saying the halving and try not to laugh. But there's a reason why these names are dumping after earnings. That people are starting to understand how they're going to actually be hurt by this. So I think that this is a good example of, okay, well, what's going to be the driving force? And you start going through some of these names, right? It's not Google. It's not, it's certainly not Apple, right? I mean, they have major problems now. So what's going to be the driver? And we're not really seeing a driver, are we? So what we have is we have an environment where we can do trades, pull money out of the market and go do trades. I think it's a great short-term trading environment right now, and that's what I'd be focused on. I did get asked to do the DELL trade and how I scaled out of options, and I got a bunch of comments on this to actually walk through the trade, so we're going to do that now. So one of the things I got asked to do was to walk through the DELL trade, specifically the option trade, and there's a lot of moving parts to this, but we're going to get into this so that you can take a look at it yourself. Just to review on where we're at, this is from January to March. This account's up to 28. This is one trading account. This account is aggressive. It is a day trading account. It is geared that way. I do the Alpha Chasers community names in this that we're doing short term, so I can keep a record of it and what's going on. I just think it's important to understand what you're actually saying. This is not how I trade everything. Trade expectancy, profit factors 232, trade win ratio. People for some reason think this has to be higher. It's delusion. 196 is where we're at. 2 to 1 is where you want to be. That's really the sweet spot. Once you get there and you're over 50, you're in good shape. That's the goal. And that's January, February. Okay. Yes, I do have red months. Shocker, right? This actually wasn't that bad. as bad as it looks because of Friday and the fact that I actually bought puts against the VKTX position that I wanted to hold over. But nonetheless, that's how it reads. Doesn't matter. So it takes us into March, and that's really what I wanted to focus on was March. Friday, we did 34.7. The majority of this, and I really want to explain this. So what you're doing is you're concentrating on your best trades, right? You have all these other little trades that are here, 15 winners, 9 losers, 62.5. It's not, it's not realistic for me to hit 62.5 all the time. When things are like really easy, I can, but this is not an easy environment. I mean, it just isn't. You might think it is, but it's not because it's pretty frothy, right? You're buying things, then they're reversing on you. You're trying to figure out what to do. But these are all the trades. What I want to show is I want to show this this call to put. I got puts on the mind right now. So why do I want to show this? I want to show this because this is something that I bought, and I bought it before DELL came out with earnings. And so the reason I'm showing this is a couple things. Position size. When I talk to people about position size, the goal is that you take a position that can't affect the account. The goal is to take a position that can't affect the account and doesn't take you out of the game, right? It's one trade, okay? And what you're looking for is you're just looking to have that add, a solid RR to the account. So in this account, all I did was risk 1% on this trade. I saw these options. They were priced insanely cheap. I can actually give a whole video on how to determine if something is cheap or expensive on puts and calls. If you're interested, comment below. I was a registered options principal for 9 years. I just don't talk about it a lot because it's boring. Anyway, see where we're at here? Okay, so I take the risk, the earnings hit. Now, what would have happened if the earnings did not hit? Where was I going to be? I had an issue. They were going to zero. All right, so let's call it what it is. I could have shorted stock against these, right? That was something else I would have done, but I didn't do that. And we could do that in another video where we do that. So all I want to do, and you could actually watch this live, and I have a really good live trade, but I'm not going to show it tonight. All I'm doing into this first bar is selling into the rips. That's all I'm doing. I'm going to be really clear about this because people are saying, how do you get out of these trades? Okay, I'm selling into the rips. I'm not cheering, look how smart I am, look at all the money I made. I'm selling into the rips. I had stock as well. I can go through that another time. And then what am I doing here? Okay, I get these 2 dojis and I sell right into this bar, my uncertainty bar. This bar, once I crack here, and look at the majority where they were sold right there. Okay, then I get into this bar, all right, and then where does that take me? Okay, so here, and so where does that take me? All right, so then I'm out, boom, undercuts. I said I'm gonna hold some, and if it breaks the low or it breaks the open, I'm out. Broke the open, I'm out. That's it. That's the whole trade. It's not holding it all day. It's not watching the theta, which is time value, disappear. I'm in, I'm out. I took the risk. I was able to take a small amount of capital, right? And we kind of knew that this was going to, let me rephrase that. We knew that this had the potential to be a very good report because of fundamental analysis. I'm not going to bore you with the stool and what our thought process was, but it was pretty obvious what's happening in the market, right? Anyway, so we didn't know it was going to be this severe, or we would have done more. I mean, but we knew to put ourselves in the right idea. And the purpose here is showing like, this is all you're doing. You're just scaling out of the trade, right? I'm not sitting here cheering. We're not high-fiving each other, right? So you're just scaling out. That's it. I'm more than happy to walk through this. But the important lesson that you should get from this is I risked $2,500 in an account that probably has, I don't know, I have to look. It's somewhere between 350 to 400. We started with 2. We're up 2. So it's probably in like low 4s now, or high 3s, somewhere around there. I have to look. But the reason I'm saying this is, if I come in and that's at 0, it doesn't affect the account. But if it hits, like this hit, it does affect the account. And so that's your job when you're buying an option. If you're not looking for a multiple like a 5R or a 6R, at least on options, I don't know what you're doing. I mean, I really don't. I'm not one of these guys that does a lot of the 0 dated option stuff. I get it. But to me, it's just on the indexes, why don't you just trade futures? It just doesn't make any sense to me. But in regards to this kind of stuff, I mean, I get it, but all you're trying to do is take a small amount of capital and actually have it make a meaningful effect on your account. So I hope this is helpful. I can go through more trade management and portfolio management stuff like this if you think it's helpful. But at the bottom line, this is what you're trying to do. You're trying to lever what you know about the market, and you're trying to lever, a piece of an asset class to get you a boost. So I really want to hammer that point home, and I hope people got that concept. You're risking a small amount of money. I don't even think I was risking 70 basis points maybe on that account. And I know I have to clean some of this stuff up. I just literally do not have the time. It's been a whirlwind. If you signed up to join the community and you're on the wait list, please look for a letter this week. The 5 days to join is cut down. It'll say 5 days, but it's really cut down to about 3 days because demand's been a lot, and it's just me. So I try to keep the room and the culture the way that it is because it has to be effective. So just FYI, you should be getting, if you're on the wait list, just be on the lookout for it. All right. So again, what are we showing you here? Well, this is a long-legged doji. And now we're down, right? So this is telling you that we actually, by not holding those calls, that we're making the right choice. This is making a decision. It's telling you which way that it's leaning right now. So I think that's a really important distinction. For me, and looking at this market, I think there's some cracks that are starting to show, and I think we need to be aware of that. You're going to have to do what you want to do here. My advice and what I'm looking at, and obviously it's just an opinion, it's not even really advice, you need to be trading here. You just need to be getting in and out of the market and trading. You're starting to see some things get a little bit tired up here, and we're starting to see these reversals, right? And we start seeing stuff like this, like XLC reverse, or you start seeing Meta reverse. You start seeing these names that looks like they're going to pop out, and then we're not getting that follow through. It's an issue. Now, I will say this, if you can see other names continue to swap out, that's great. But when you start seeing names like NVIDIA and you start getting these kinds of bars, you're going to have an issue. And that's one of the things that we really need to talk about here. And when I say, well, what do you mean you're going to have an issue? You want to measure these bars. Always measure these bars and just see what you're dealing with. And right now, what we're looking for is, are we 50% lower on that bar? And the answer is, yeah, we are. So now we want to see what happens. In other words, if we can't get a close over that 852 level, well, we could be putting in a short-term top. And listen to those words, short-term top. Do I think this is over? No. Do I think that you're in a position where we're going to see like this just crater and, oh, it's .com? No, that's why I went through that fundamental analysis with you earlier. But the question becomes, what names are you going to trade? I think it's the same. I think it's the same names. You just have to cycle through them. That's where my head is. You're seeing some rallies in like coin. I don't get it. I mean, if trade it if you want to trade it. For me, if it's going to trade like this, go for it. I mean, coin and MicroStrategies make the most sense with Bitcoin. I do think that you're going to have an overhang on MicroStrategies now until that secondary places. Very similar to how you had an overhang on VKTX until that figured out what it wanted to be. And now if you start looking at VKTX, you have the second highest close, you have a doji. Real easy to figure which way that one's going to go, right? Just the dojis are uncertainty. Let them figure themselves out. Google does not seem to be able to get it together, and that should be an alarm bell, right? Like, it's not realistic. It's one thing if they're underperforming and other names are going higher. It's another if they're technically breaking down. And that's my point. There's some things here that just you want to watch. So you could say that this is where you are. You could actually come up here, and I think that's actually better and more prudent that it broke earlier. You overlay this, and you see that the 55, the 22, and the 12, I use the 12, a 22, a 55. You should use what you're comfortable with. But you have a 12, 55 cross. You have a 22, 55 cross. Does that make you feel warm and fuzzy? Only if you're short. Apple. I mean, this shouldn't be rocket science, guys. I mean, the fact that they're out there basically gouging clients for 30% to use the App Store, and now that's come home to roost, and now you're setting up for a death cross. I mean, you cross the 12, you cross the 22, and the 55, which is what I use. Again, you should use what you're comfortable with. When you start to see this, your antenna needs to go up. And when I start to see stuff like this is a beautiful short. I wouldn't go home with it, but you got your death cross right up here. It's never really done anything since then. We played it for a bounce. We actually sold it the other day and cleaned it out at 205, made $7 to just get out of the way. I think what we're going to have to do is we're going to have to see more companies beat earnings and raise expectations. And you have some this week, but you also have some other names out there that you're going to have to pay attention to. What's Powell going to say? What's going to happen with non-farm payrolls, ADP or Wednesday? So we have some data-driven events. And right now, it seems like our hopes are what? Our hopes are on Bitcoin. I mean, I'm trying not to laugh, but I would like it to be more than that to keep the rally going. And just because I say that this is not 1999 does not mean that we're just going to go up every day. I please hope that you get that. I put a lot into this video tonight. Tell me what you like, what you didn't like. That is it.